Hi everyone, Mike Flores here on behalf of iTradingU. Today, I'm going to take us through a few charts that I see some nice setups coming up for the week ahead, possibly. But I also want to introduce a few things on the charts that we haven't seen before. And let's start from the top. Here, this is a chart of the E-mini S&P 500 future. What you see here is a red line, a horizontal red line up here, a horizontal red line here, and a horizontal black line here. What do these lines represent? Well, there's actually a black line underneath this red line as well. And this represents the 55-day high and the 55-day low. This represents the 20-day high and the 20-day low. Notice the 55-day high and the 20-day high are overlapping. And that basically means that this has been the high for the past 55 and 20 days. We also have down here at the bottom a new indicator. It's called the ADX indicator. ADX stands for Average Directional Index. This indicator was developed by Jay Wilder. And the purpose of this indicator is to measure the strength of the trend. It doesn't tell you the direction of the trend, just the strength. So it doesn't tell you if it's an uptrend or a downtrend, just that the trend is strengthening or weakening. The scale of the reading from there is from 0 to 100, but rarely does it get above 60. And when it's above 40, that's when we are going to be looking at the market very closely to see how it behaves. Anything above 40 is a strong trend. We also want to see the ADX above 20 to indicate that we are actually in a trend. Below 20, it means we are in a trendless market or a non-trending market. Currently, we see that the E-mini S&P is at a rate of 12, saying that it's in a non-trending market. And if we look here at the chart, we can see it's been in an up and down pattern over the past couple weeks. Now, what do I like about this chart? Well, I'm looking at this chart and I see that currently we're above the 50-day moving average and the 200-day moving average. And we've spoken in the past that indicates that we're in an uptrend. But notice how it's weakening and we're flirting with this 50-day moving average. So I'm going to watch this very carefully this week. But what's the trade idea here? So if this market breaks above this 55-day moving average, in all likelihood, this ADX will turn higher. So as long as this ADX is at or above 20 and going higher, and this market breaks this high, I will buy this market, the E-mini S&P market. Everyone's talking, is the market going to go down from here? Is it going to go up? Well, we don't really know. So we have to do what the technical picture shows us. Now, there's an old thing that everyone says in the market, sell in May and go away. Now, that doesn't necessarily mean sell on May 1st. Usually the first couple days in May are pretty strong. And if the market indicates strength, we're going to take that signal. So that's what I'm looking at here in the E-mini S&P market. Now, let's go to the Australian dollar versus Canadian dollar market. All the setups that I'm going to show here are very similar. We're going to be talking about breaking the 55-day highs or breaking the 55-day lows. So starting here, we see we're above the 50-day and 200-day moving average. We're still in an uptrend. We can see that the market has gone from here up to here, right? Just by looking at it, we can see it's in an uptrend. But over the past month, it's been consolidating kind of sideways-ish. Now, what's my trade here? If it breaks this 55-day high, and the ADX is climbing, right now the ADX is going down, but if the market goes higher from here, the ADX will turn higher. So if it turns higher and goes up, the ADX is climbing, and the market breaks the 55-day high, I'm going to buy this market as well. I will leave my stop at the low of the breakout day of the 55-day high. All right. Now, another thing to note here is if this market gets back above the 40 line, this blue horizontal line here is the 40 line. This is a standard indicator on all charting platforms, the ADX. Okay, the 40 line. If it breaks above the 40 line, and any day after we're in this trade, it breaks below or goes lower by any amount, we're going to exit the trade. So I'll say that one more time. So any day that the market gets above 40 on this ADX indicator, and it turns down the next day by even 1 point, we're going to exit any trades that we have. Okay, we're not in the trade yet. So in another post, if we do get into it, I'll show you guys exactly what I mean. All right, let's look next at the sterling dollar market. Looking at the sterling dollar market, we can see here goes the horizontal red line. Notice the black line is not seen because it's overlapping. They're both the same, 55 and 20-day high. So here I'm going to look to buy on a break of this high. Notice we're above the 50-day and 200-day moving average. You can see the market's moved up. And we can see that the ADX is above 20 and it's moving higher. So on a break of this high, I'll buy on a breakout, leave my stop on the low of the breakout day. Okay. Why do I like the sterling market as well? Is because it's in there's a seasonal bullish period coming up in May for sterling against the dollar. So that's another edge to our side, and it will be making a new yearly 55-day high. So these are important, right? Our roles as traders is to add the edges to our side so our trade has more probability of being successful. We are trend followers, so we want the market to break out to the upside. So we are above the 50-day and 200-day moving average. A break of the 55-day high will get us long and the ADX climbing. Next, let's go to dollar yen. Dollar yen has a bit of a different picture here. We can see that currently the ADX is flat and at 14. But notice how it's turning blue, so maybe it's going to get a little bit stronger. What I'm looking at here is I have a head and shoulders pattern. So we have a shoulder, right here. We have a head here. We have a shoulder forming here. Notice here we have a whole bunch of stuff going on. We have the 20-day low. We have the 55-day low in black. And we have the 200-day moving average in pink dotted. If we break below this 55-day low, I will get short. And I will add more to the position if we break below and close below the 200-day moving average. A move down here will have the ADX climbing, hopefully above 20, and that will give us more of an edge for our trade here. This could take a couple of days, maybe a week or two, but I'm going to be watching this very carefully. This is a very nice setup happening here. And lastly, I want to talk about soybean meal. Looking at the soybean meal chart, we can see that it's had a nice move up. We're in an upward trend. We're above the 50-day and 200-day moving average. And just by looking at the market, you can see it's gone higher. Notice how we are above the 20 in the ADX, and it's climbing currently. And notice here we have the 55-day and 20-day high here. So on a break of this one, I'll buy. And my stop at the low of the breakout day. And this as well is coming into a seasonal bullish period. Soybean meal actually currently is in a seasonal soybean bullish period. So these are edges to our side. We're above the 50 and 200-day moving average. The ADX is climbing and above 20. If we take out the 55-day high, that's a very bullish signal. And we're in a seasonally bullish period for soybean meal. So there we go. Add the edges to our side again to make this work for our advantage to make some money. Now, why did I put up the 55-day and 20-day highs and low channels? Well, the reason why I brought these up is because there were a group of famous traders back in the early 80s called the Turtles. They were created by Richard Dennis and William Eckert. And they made the 55 and 20-day channel very popular. And they made lots of money. And to this day, many of those turtles make lots of money trading the 55-day and 20-day channels. Now, they have their own derivations of it, but pretty much it's the same systems that have been in place since then. So I'm going to create more posts in the future about how to trade these 55-day and 20-day highs. And I just want to bring it to your attention now so you can be comfortable seeing them and seeing how we use them with the ADX. The ADX is a powerful tool because we can use that for all of our trending techniques. Because remember, it tells us the strength of the trend. So please leave any comments, posts, questions, or commentary that you might have in the comment section of this blog. And let me know what you guys think about this. If you'll be trading any of these, what you think about them, or any thoughts you have. On behalf of iTradingU, this is Mike Flores. I want to thank you guys for being with me today. Have a great day.